We were watching oil prices. They dropped more than 4% today, the biggest loss since July. And the Chartmaster says there may be more downside ahead. Let's bring in Carter Worth of Worth Charting to break it all down. I guess, Carter, this goes right to the transitory conversation that we've been having.
Well, in many ways it does. I mean, essentially, just looking from 30,000 feet, crude a year ago was $40 a barrel, and essentially it's 80 now. It's obviously a big move. We hit as high as 85 just a few sessions ago. So the question is this sell-off from 85 and change to just below 80? We hit 79.70 today. Is it normal? As of now, that's all you could characterize it as. Let's look at a few charts and figure out where, if it goes further, it might go. So the first, that's WTI, and you've seen on the top there, I've annotated with what's called an internal trend line. Most trend lines are below price action. In this case, it's failed 3 times to the penny right at that ascending line. And if you look at the drawdowns that ensued, next chart, you'll see that we had, of course, the March drawdown, that was 16%. We had the July-August drawdown, that was 20%. And this one is down about 6, 7 now. Do we have to go down as far as those others? No, but it isn't random where we stopped, again, up against that internal trend line. Third chart. So if and as this dip were to continue, and it's more in line with the March dip down 15, 16, or the July-August dip down 20, the bottom trend line is something to consider. And so that would take you towards 72 or thereabouts and about a 15% decline. So final chart, this little minor channel that we're in, we flirted with breaking it today. And I think one has to assume that we will break it, or said differently, that the dip that's only 6, 7% now will go further.
And does that necessarily mean energy equities will follow, Carter?
Well, the interesting thing about energy, let's say it this way. If you were to look month by month, from the month that the pandemic hit in March, oil as a sector, energy as a sector, was down much worse than the S&P. And then, of course, in April and May, energy ricocheted hard, as did the market, but because of its beta and cyclicality, much more than market. But since then, 20 months, energy sector has outperformed the S&P 10 and underperformed 10. And if one didn't catch those first 2 months, April, May, energy has been a massive underperformer. I just don't think one's paid for the risk.
Carter, thank you. Carter Worth of Worth Charting. One is not paid for the risk, Tim. What's your stance on energy stocks?
I think there's certainly not a linear relationship between the oil price and what you should see stocks do. And as we know with oil services, they are nowhere near back to pre-COVID levels with an oil price that's higher. And some of this is really drilling into, I guess pun intended, the dynamics that move oil services. You need a higher oil price for a more sustained period to then see people reaching out and drilling and expanding their budgets and their capex and their opex. And I think we're going to see that. I think the reality is that the fundamentals, the structural nature of this sector is that the swing production doesn't exist in the United States right now based upon a lack of investment. It exists within OPEC Plus. And they're the ones that, at least for now, are turning the screws a little bit. I think for now, they're friends. And I think they're going to continue to at least be in a position to have cohesion and solidarity amongst that group. I don't think oil prices are going to fall dramatically unless you have some kind of a monetary impact. And we're talking about the Fed, and we're talking about dynamics that do affect the price of oil. The fundamentals, the structural dynamics, and the secular dynamics around investment or lack thereof in oil, I think oil prices are moving higher. If we're so worried about inflation, the Fed's not going to impact the price of oil and commodities overnight. So I actually disagree. I think we have a case here where we've had a pullback. It makes a lot of sense we've had a pullback. You also haven't had macro OPEC dynamics to drive the next move higher. I think you'll get that.
Do you also, Steve, go against Carter Worth?
I believe that oil is coming in, and I believe for a fundamental reason or two. The Iranian nuclear deal has Iran exporting 500 to 600,000 barrels per day. If that gets overturned or reversed, it goes up to 1 million. That floods the market, and then couple that with China slowing. But then you have the juxtapose holding the price on oil with the Biden administration cutting down on drilling and lack of supply. So I think it does come in. I don't think it comes in drastically, but I like on Carter's levels of roughly 67 to 72 a barrel of oil.